Good morning from our global headquarters in New York. I'm Menace Cranny alongside Danny Berger. Welcome to Bloomberg Brief. Let's set that agenda.
Cuts and holdouts, a trifecta of rate decisions this week. Fed, BOJ, BOE, all on deck. Pressure mounts on Beijing to act to stimulate the consumer as data disappoints. And political disruptions around the world, a leadership challenge in Germany, France downgraded, and South Korea impeaches its president. Good morning, Manus.
Danny, good morning. By the close of business on Friday, we're going to have 22 central banks will have set the narrative for the close of 2024 on their rate decisions. To markets, we start with a bid this morning to equity markets. Very simply put, we were on the back foot last week. We stumbled on the S&P, but we roared on the Nasdaq. The fourth week of gains on the Nasdaq, Danny. It was the Broadcom boom on Thursday. It carries through this morning. This week, retail sales, FOMC, all focus on the guidance from the FOMC and from Powell. A warning from Laurie Calvasino over at RBC. The setup for stocks echoes 2018. Elevated sentiment and positioning. Roll it over, have a look at the bond market. The worst week in 2 months. Nobody wanted to go dancing with duration. That is my favorite line of last week from BMO, from Ian Lingen over at BMO. But the 30-year paper, the worst sell-off this year, up 28 basis points, Danny. That sets the tone of readying ourselves for a hawkish, potentially a hawkish cut from the Fed.
And what will the dots look like? All right, Manus, some stocks we're keeping an eye on this morning. Ford underperforming this morning. Jefferies has cut its recommendation on the auto company to underperform from hold with a new price target of $9.
MicroStrategy surging after the announcement it will be included in the Nasdaq 100, as well as Bitcoin reaching yet another record high.
And finally, Tesla, that's higher this morning. Wedbush analyst Dan Ives, yep, you guessed it, has raised his price target, a street high of $415, saying that Trump in the White House is a total game changer.
It is an evangelist, if nothing else. And in just a few moments, we'll catch up with Wei Li of BlackRock, and later in the hour, Skylar Montgomery joins us around the desk. Skylar Montgomery Koning, I should say, of Barclays joins us around the desk this morning. Danny.
Yeah, and it is an important week. We know what we're going to get, at least we think we know what we're going to get from the central banks. But as you say, it's about what they guide to next.
Yeah. And this question, we've asked it of all of our guests, what value are the dots? How can you have a dot plot when you don't even know what the tariff schedule is going to be, who's going to be on that side? We have a fair idea of who's on the sideline of that. But the risk is this, and I heard you talk about this the other day, the risk is another explosive moment in foreign exchange volatility relative to equity, relative to bond. The bonds were unseated last week.
Yeah, this is the interesting thing. Equity and bond volatility has been low. FX hasn't. When does that kind of seep over? And when it comes to this equity market, something kind of strange has been happening. The breadth has been really bad. For the 10 past days, breadth has been negative. And it's really been about AI leading the charge as it has been. On that note, the BlackRock Institute put this out the other week, and this raised a lot of eyebrows, saying that 2024 has reinforced our view that we are not in a business cycle. AI has been a major market driver. Inflation fell without a growth slowdown, and typical recession signals failed. Are we no longer in the boom-bust cycle? Is this something different? Joining us now is Wei Li, Chief Investment Strategist at BlackRock. Wei, great to see you this morning. I wanted to start on this, because people found this fascinating. And I have to say there was some pushback to saying, oh, BlackRock saying this is basically justification for high valuations. Why is this time different, Wei?
Well, what we're experiencing right now is transformations that distinguishes what we're in right now distinctively from the typical cycle. What we have seen is concentration has become more concentrated. An expensive part of the market has become more expensive because of mega forces like AI, like other mega forces as well. So all of that just to say, when we're looking at an environment where typical cycle signals are not working, we have to apply a new framework and really focus on fundamental drivers where earnings are coming through. And again, here we're looking at drivers being tech and AI-related themes. So you look at 2024, tech Magnificent 7 delivered 45% earnings growth versus 4% for the rest of the U.S. equity market and 1% for the rest of the world outside of the U.S. And this really supports the concentration that we have seen. But looking ahead to 2025, we think that there is room for some of that concentration to broaden out as AI adoption broadens out and U.S. economy continues to hold up, which is why we are pro-risk heading into next year, despite some of the valuation metrics looking a bit more stretched.
Well, you're not just bullish, but you've increased your overweight on US equities, less so to bonds. Let's just dig a little bit deeper into the AI theme. You talk about expanding on that. You talk about the energy, and again, we've heard this several times. The energy demand will drive a 3.5 trillion investment per annum this decade. So how much are you actively skewing then towards the delivery of energy into the AI scenario?
Well, energy is one sector that is set to benefit as AI broadens out, and this is where also the juxtaposition of two mega forces comes in. One is AI broader adoption, infrastructure build out, data center build out. One is the low carbon transition. All of that means the demand for energy is likely going to increase in the coming years and decades ahead. So as we think about AI broadening out, we're looking at energy, utility sectors as sectors that could benefit from this theme.
Wait, does that mean that what we're seeing in the market, again, over the past 10 days, negative breadth, the usual suspects, the Mag 7 leading, that there will be a broadening out in 2025, that this isn't the norm at this moment, but the broadening out is still going to be AI winners?
So as we look ahead to next year, Magnificent Seven and tech are still expected to lead in terms of earnings momentum, but the gap between Mag 7 and the rest of the market is expected to narrow. And this is the story of broadening out, which is as much the rest of the market catching up as the leaders potentially slowing down momentum. We do think that the rest of the market are well supported by a U.S. economy that is holding up quite well. You look at Atlanta GDP nowcast is pointing to Q4 tracking 3.3%, which is above trend. And we're also still looking at an environment where central bank is cutting rates rather than hiking rates. So this is why we head into next year pro-risk for now. But we're looking at announcements of tariffs. We're looking at rate repricing volatility as signposts to potentially dial down risk-taking in a year that is likely going to be just as volatile, if not more, than this year.
Wei Li, one thing over the weekend has been the data from China on retail sales. Industrial production is front-loading. We understand all that. How important is it for global risk that there's an upscaling in the quality of the response mechanism of stimulus in China?
Well, the data from China over the weekend was very disappointing. Retail sales disappointed significantly to the downside, and this is after a quarter of easing and a quarter, almost a quarter since the last policy pivot, right? So indeed, there are structural issues facing Chinese growth that really is the reason behind why we believe by the end of the decade, Chinese growth would have a 3 handle, which is not that much better than some of the other developed market economies. Now, having said that, the tactical policy pivot is rather distinct. We're talking about official characterization of fiscal policy to be more proactive compared to before, the characterization of the monetary policy to be moderately supportive as opposed to prudent, right? So these are distinctive kind of pivot. So we think that over the very, very near term, there is a China tactical story that we are keeping, we're paying attention to, really as optionality to the whole portfolio. But over the long term, the structural challenges very much exists, which is why we're less positive over the longer term. And the hope that Chinese economy turnaround would leave the global economies, I think that has been somewhat managed. The expectation and the hope have been somewhat managed by the disappointing data that we have seen so far. That is after supposedly supportive policies for a while.
A little bit of caution there, Wei Li, on the longer term in China. Wei Li of BlackRock, thank you very much for joining us, setting the agenda this Monday morning. Other stories training on your Bloomberg terminal. This is what we've got for you. Homeland Security Secretary Mayorkas says there's no evidence of foreign involvement or national security risk with the drones being seen in the skies of the Northeast. Mayorkas called on Congress to grant the authority to state and local officials to have the ability to counter drone activity under federal supervision.
South Korea's constitutional court has started reviewing President Yoon's impeachment case, while investigators reportedly plan to question him this week over his martial law declaration on the 3rd of December. The court's decision on Yoon's impeachment can take up to 180 days.
France's new Prime Minister, François Bayrou, is meeting with the far-right leader Marine Le Pen today, kicking off an effort to form a government that can push a budget through the divided parliament. Le Pen has said that she is willing to work with the next government so long as it takes a less aggressive approach to cutting the deficit.
And coming up, it's a surprise retail slowdown in China. Wei was just talking about caution on the structural story. We'll get the latest on the data itself on your Bloomberg Brief.
It's Bloomberg Brief. I'm Menace Rennie alongside Danny Berger here in New York. We got the latest data from China showing an unexpected slowdown in the retail sales. That's after Beijing's lack of detail on the pledged measure to boost consumption disappointed investors last week. For more, let's get to Alan Wong. He joins us from Hong Kong. Alan, look, this data tells us about front loading on the industrial side and perhaps a weakness on the consumer. We've just spoken to BlackRock. They are skeptical in the medium term. Tactically, they're optimistic for stimulus. But what does this data really tell us about what's going on?
Yeah, it wasn't too long ago when, back in October, the economy got a shot in the arms from really strong retail sales growth. It was the month after China unveiled its very forceful stimulus measures. But the latest data from November show that the effect of the boost to consumption appeared to be fading fast. Retail sales in November dropped 3%, below the most bearish of all estimates, after growing almost 5% the previous month. It suggests that one of the key tools that China uses to encourage consumption, a program that subsidizes purchases of home appliances and cars, was losing its effects.
Alan, if that's all losing its effect, look, we had Xi chairing the meeting that they announced more stimulus, and there was the thought there's going to be a policy follow through. What is next for that stimulus push? What type of policies need to be announced, and especially what type of detail needs to be announced to stimulate consumption, to your point?
I think they make that point pretty clear. They will announce these stimulus measures, and obviously some investors were disappointed that they didn't get any specifics from the meetings last week. But the policymakers have made it very clear that domestic demand is critical to supporting China's economy, especially in the next couple of years because of the potential headwinds to trade when Trump is president. And officials last week, they said they gave unusually strong signal to prioritize boosting consumption next year. It could mean expanding the subsidy program that I just talked about, and the Chinese authorities have over and over again reminded us that monetary easing and more fiscal measures are in the works.
So if we're not looking at a form of helicopter money, all-out helicopter money to stimulate demand, what is the capacity to boost the deficit to be a lot more targeted in the stimulus that they do put into the economy?
I think it's mostly speculation at this point, unfortunately. How they want to use any additional fiscal firepower to stimulate consumption is a big question mark. We know that they will not, like you said, give out helicopter money, but the form of any stimulus measures on domestic demand is the many trillion-dollar question.
Alan, appreciate your time this afternoon for you. Alan Wong, thank you so much. Okay, coming up, a vote of no confidence. What does the future hold for German Chancellor Olaf Scholz? We're going to have that next, all covered for you on your brief this morning.
Now, after a lengthy period of restrictive policy, our confidence that we are seeing a timely return to target has definitely increased. Since September last year, we have had 6 consecutive forecast rounds showing inflation returning to target in the course of 2025.
ECB President Christine Lagarde speaking earlier at the annual economics conference in Lithuania. Meanwhile, elsewhere in Europe, in Germany, Chancellor Olaf Scholz faces a no-confidence vote today, which he intends to lose and will trigger a snap election in February. Joining us now is Bloomberg's Oliver Crook. Oliver, what does the sequence of events look like today?
Yeah, so listen, Danny, this all really began on November the 6th, actually hours after Donald Trump was declared the winner of the U.S. election. A few hours later, Olaf Scholz fired his finance minister because of disagreements that they had over the budget. Does that sound familiar? This is an issue we saw also in France. As the sort of stagnation and growth begins to suffer here in Europe, a lot of this political discord is brought to the front today for Olaf Scholz as he stands before the Bundestag. He will make a 25-minute statement in front of the lawmakers here in Germany at 1:00 p.m. That will be followed by 2 hours of debate from lawmakers. And then after that, there will be a sort of assembly line vote within the Bundestag, which will all culminate at about 4 p.m. And then he is basically expected to lose that. And that paves the way for him to hand in basically the dissolution of the government to the German president and head to the polls on February 23rd. And looking at the polls right now, the expectation is that the CDU, the center-right, Merkel's traditional party, led by Friedrich Merz right now, will be the #1 party, followed by the AfD, Alternative for Deutschland, the far right here in Germany, doing really the best they have ever done potentially in an election since their formation, then trailed by Scholz there in the third place, which makes a likely combination for a government, the CDU and the SPD, the Grand Coalition, something we've seen very often in German history, certainly under Merkel.
Oliver, good morning. When you look at the economic backdrop on the cusp of recession, from the strong man of Europe led by Merkel through the debt crisis to Olaf Scholz, you have an economic backdrop here. Factory orders are on their knees. Profitability is down. Productivity is under pressure. He's not exactly going to the polls with a strong hand, is he?
Not at all. And really, I think that the real question here for many people in Germany, whether it's in business, you talk to some of the lobby groups, is they get the sort of feeling, and this is the sort of feeling that I get from a number of people, is that all of the politicians that are campaigning on their economic platforms going into this election are basically trying to treat with cyclical medicine a structural problem in the German economy, right? There is a cyclical downturn. That is part of the issue for the auto industry, but there are just fundamental structural issues with this economy making it less competitive, whether it's higher labor costs, a very inflexible labor market. Of course, there was the energy crisis that really hit first the heavy industry, but that's trickled down throughout all of the sort of German economy. So I think that really for many people in Germany, the concern is that potentially, since the sort of slowdown is very, very slow, it's not a sort of cataclysmic blow up, that actually the responses are going to be very, very slow and actually maybe miss the mark. And this is where you get into the debate about the debt brake. The CDU, which is likely to lead the next government, we saw a sort of a copy of their platform that they're going to put out very soon. They basically have walked away from this idea of releasing the debt brake in order to stimulate growth, and that is going to concern a number of people here in Germany.
Oliver, you mentioned the auto industry. Volkswagen is headed into its 5th round of talks with the union as strikes still loom over this company. Is there any sign of a breakthrough?
I think that this was going to be one of the toughest sort of labor negotiations in recent German history. There's no way around that. You're talking about Volkswagen, the great icon of German industry, really the sort of propulsion of the sort of auto industry with all of its brands and all of the jobs. You know, it's hundreds of thousands of jobs here in Germany. This is going to drag on for a while. And we should just talk about the fact that we've seen the PMI charts. We've seen the slowdown, 2.5 years of contraction, even more contraction today we got from the German manufacturing sector. But this is the year where it went from the charts to the kitchen table. We look at the Fortune 500 companies in Germany, 60,000 job cuts so far this year, and that does not even take into account whatever we're going to get from Volkswagen, which is anywhere to the order of 10 to 30,000 job cuts. That's where the reality is, and that is where you're going to see it manifest itself in the politics, and increasingly more extreme politics in Germany, where you see the far right and the far left really attracting votes in the sort of absence of a sort of solution to the question of how do you fix this German economy.
Ollie, thank you very much. Oliver Crook there outside the Bundestag in Germany. Front pages, this is what we've got for you. Let's kick them off, Danny, this morning. Good to have you back, by the way.
Thank you. Nice to be back.
Yeah.
It's nice to know you missed me.
Spend a little bit more time together. Kick it off with Reuters. It's nearly Christmas. Let's kick it off with Reuters. They lead with their interview with Janet Yellen. She said that the US and the Allies could consider lowering the $60 price barrel cap on Russian oil. The US won't rule out sanctions on Chinese banks as part of their efforts to cut Russia's oil revenue.
Yeah, off the back of Anne-Marie Horderon's scoop last week about potentially more sanctions on Russian oil. Next up, on the Washington Post, United Healthcare CEO Brian Thompson was worried about United Health's negative image before the shooting. One person familiar said that he understood the public was frustrated with what they perceived to be the company's actions. Police have said that Luigi Maggioni, the alleged, targeted United Healthcare because of its sheer size.
And the Journal reports that Apple is planning a thinner, foldable iPhone. The company sees the device as a bid to revive the growth after years of offering largely incremental upgrades. The current foldable phones aren't that thin that are on the market. They're not that energy efficient, which is why Apple may come in. They're going to have to come in with something pretty big and pretty spectacular on this, aren't they?
Yeah, and Mark Gurman of Bloomberg also reporting this morning that they're also doing an iPad foldable version too. But Apple used to say, hey, here's what you want and give it to you. This is something different. This is a different Apple following the trends. This isn't new or innovative. Already there are other foldable phones out there. Apple, I guess, is just trying to do it better than the others.
I think it comes down to, which part of the market they're going to go after. You think about gamers, software developers, or just watching a movie. I mean, I remember when I first got my phone thinking, I'll never really watch a lot of video. And we spend our entire lives watching video on these things. The question is a foldable iPhone or a foldable iPad more use to you?
Probably not. I'll leave it there.
Killer line. Killer.
From our global headquarters in New York, welcome back to Bloomberg Brief. Danny Berger alongside Manus Cranny. Let's set your agenda.
Cuts and holdouts, a trifecta of rate decisions this week. Fed, BOJ, and the BOE all on deck. Pressure mounts on Beijing to act to stimulate consumer as data disappoints. And political disruptions around the world. A leadership challenge in France. Germany, France downgraded, and South Korea impeaches its president.
Well, it is a market that has been struggling to keep up its momentum. Futures are positive this morning, led by tech yet again, up 0.3%. But there has been 10 consecutive sessions where more stocks fell than gained. That is the longest streak since 1996. For both equities and this bond market, the thing to contend with is the weak of central banks. You mentioned it, Manus, 2/5 of the global economy will set borrowing costs. Treasuries, those yields were up 24 basis points in the last week. That is the biggest jump since October 2023. This morning, a bit of a bid. Yields are lower. Manus.
Yeah, look, those bonds backed up like Billy O last week. 30-year paper really ramped higher. It was one of the biggest moves in the bond market, Danny, that we've seen all year at the longer end of the curve. Well, up 28 basis points. And the point about it is, this is the bond market preparing for probably a hawkish cut, and that's probably what you get. But the line of the week goes to BMO. It was nobody was prepared to dance with duration. I love that. It encapsulates the week, really.
It does. I mean, the 30-year auction was the weakest among all the auctions last week. And there is this kind of thing brewing where does the Fed lose control of this market? Is this a market, as we've seen in the past two decisions, that even though they are cutting, even though they're trying to ease policy, it is a market that is doing the complete opposite?
And you know what that is? It's called the human steepener, and it is President-elect Donald Trump. That's one of the theories out there. Inflation could also be another issue. It's all co-joined. Anyway, the dollar is reacting correctly. It's snapping a 6-day winning streak this morning. But look at this. This is the strongest rally in this currency in nearly 9 years, up 6.3%. Strength is stomach churning. It's the biggest rally. Is it sustainable? Let's ask our guest, Skylar Montgomery Koning of FX Strategist over at Barclays. I mean, Kit Duke says it's stomach churning. Does it feel like that? Is it stomach churning? Or is it something which will power through into 2025?
I mean, we've certainly seen a very big move. I think there are a couple key points to make. One is that we had a strong dollar prior to the U.S. election. So we had a strong U.S. economy that fed into U.S. exceptionalism. It fed into less dovishness expected from the Fed. And then we got Trump on top of that. And we've had a big move, but that doesn't mean people are overpositioned in it. We don't think it's actually that crowded. When we look at our sentiment indicator, it blasted upwards on the election, but it was nowhere near kind of max dollar bullishness, and it's actually returned to more neutral levels now. Now, some of that could be year end, but it does mean to us as you go into 2025 and some of these policies start coming through, you can see more dollar upside.
When does dollar upside become a problem for the rest of the world? Because for now, we've heard from Japan saying that they don't necessarily see an issue with a weaker yen. China saying that they'd use a weaker currency, potentially for policy against Trump. The Europeans would probably welcome a weaker euro at this point. At what point does dollar strength go too far, though, that it creates disruptions in the world?
I think we're not there yet. And the biggest thing is that we're not at kind of these stretched valuations. Valuations are actually very reflective of the fundamentals. And so that shouldn't be something you're fighting. And while you might get commentary from China, from Europe, that they don't want a stronger dollar, it's actually very helpful for them, right? They're export markets. It's very encouraging from that perspective. Maybe somewhere that's a little bit different is in Japan. That is where you do see valuations that are much more stretched relative to the dollar than elsewhere. And because you've had MOF intervention in rounds throughout the past cycle, you could see a Trump presidency that's more positive towards that than any other kind of presidency previously. So there you could see some intervention for yen strength versus the dollar. But I think the other markets, it's not really as warranted or wanted.
The question that we've been asking of several guests is equity vol is moderated, bond vol actually at a 4-month low, but FX volatility erupted in August. It was the great unwind of the carry trade. I think on August the 2nd, you saw the dollar yen move by over 4%. Is this where we see the biggest potential risk in 2025, a dislocatory moment in one of the major G10s?
I mean, absolutely we could. In terms of policy is being very volatile relative to history, right? So we have these very data-dependent central banks, and that means we're pinging around on that data because that's what's influencing what's actually the central bank is doing. So the ECB, for example, right? Data turned and then the ECB turned rather than the ECB guiding monetary policy. And that means you have volatility that's elevated, and the most direct feed through is in FX markets.
There has been, in sort of the U.S. exceptionalism narrative, I've seen more people come out. One of them is, he's a perma bear, but from SocGen, Albert Edwards, saying basically the exceptionalism is what he calls U.S. fiscal dysentery. Basically, the thing that's been propelling us is spending by the government. And the thesis goes that at some point that's going to stop. It's either going to be fiscal hawks in D.C. or the market that acts as a regulatory force. Do you expect any pullback sort of in the levels we're getting spent from D.C.? And could that be the thing that puts a ceiling on the dollar?
So our baseline is actually just that we get tax cut extensions. We haven't built in any other fiscal into our projections, and that still has U.S. growth above potential in 2025. And you still have some positive fiscal tailwinds from stuff that's already been passed, like the IRA, like the CHIPS Act, and that's a positive feed through in itself. And it's in sharp contrast to what you're seeing elsewhere, right? You're starting to get fiscal restriction in Europe. And because you have that contrast, I think you can continue dollar upside regardless of whether you have no more fiscal stimulus because you have all the other positive tailwinds.
The bond market backed up last week really quite aggressively. We go into this week, we've got the FOMC, we've got Powell, and we've got PC. Those are the pieces of theatre that will drive the narrative for the bond market and then for the dollar. How hawkish, I mean, there is this tagline, a hawkish cut that you're going to get with, I'd say, pretty useless dots. Maybe that's a little bit aggressive. That's a personal paraphrase. But is that a baseline assumption by the dollar market?
I think it is some kind of hawkish cut. You'll get guidance for next year, and there will be focus on that guidance, as well as you say, I think there will still be some parsing of the dots, even if you don't think there's a lot of value behind the information
I think the scenario is there for them to become less valuable over time.
Well, I literally asked this to Claudia Sahm, and she was like, they're always kind of useless. But this time around, they're even more useless because the Fed isn't necessarily baking in every fiscal assumption into them.
Well, I mean, I think it just shows you a policy direction, right? We're going to get fewer cuts in 2025 in those dots, whether it's 2 or 3 cuts. There could be some short-term feed through to the market in terms of whether that's perceived as being more hawkish or not. But the long-term trajectory is clear. And in 2025, we're going to have higher inflation than we thought previously. And we have elevated inflation now. If you've looked at the last 2 core PCE prints, they're at 0.3% month on month. That's not sustainable to get to 2% inflation.
Listen, we've got probably 1 cut and 2 prevarications, one from the Bank of England and one from the BOJ. They got time. They've told us they've got time. I'm just curious, what is the safest and simplest position in this FX market at the moment? Is it to stay short yen for the moment?
I don't think it is. I mean, for the yen, it's more of a medium-term story for us. So we think that they're going to stay on hold in December, but we expect the next hike in January. That's not really the differentiated view. The differentiated view is we expect another hike in July. So that gets you to 0.75%. They've guided towards neutral being 1%. I think certainly the market's not looking for that yet. But as we have inflation come in hotter, so we get inflation out of Japan this week as well, as we have that feed into wages and inflation expectations, you should get more hikes from them eventually. And so while we don't like yen versus the dollar, certainly it's more positive on the crosses, especially if you're worried about hedging or you think maybe you need a safe haven to have in your back pocket. Yen can definitely play that role.
Skylar, really great to have you in this morning. Enjoy the rest of your week and your holidays. That is Skylar Montgomery Koning of Barclays. Okay, coming up, political disruptions around the world from France, Germany, South Korea. We're going to have it for you next in your Bloomberg Brief. It's Bloomberg Brief. Danny Berger, Manus Cranny in New York. France's new Prime Minister, Francois Bayrou, is meeting with far-right leader Marine Le Pen today, kicking off an effort to form a government that can push a budget through a divided parliament. Joining us now is Eleonora Mavroidi of Bloomberg Economics. Eleonora, thank you so much for joining us. So, I mean, it's been political discontent in France. Is Bayrou going to have any more likely success than his predecessor in getting a budget through?
That's a good question. Well, he's definitely going to face the same fragmented and polarized National Assembly as his predecessor, and that would likely limit his ability to implement any big fiscal plans. So in the immediate plans right now, is the key priority is to form a cabinet that will be more stable than the last one, and that will be able to push the 2025 budget. Timing is running up, so in the meantime, the parliament is likely to approve a special law to let the government, to let the state finance itself. We got more information about what the state law would involve last week, and there are 2 points that pieces of information that are important. That the state council published an opinion that income taxes should not be indexed, and the pension indexation will not be delayed. So under this information, our baseline estimate is that the outcome will be a meaningful austerity, but the deficits will remain wide and will settle at around 5.4% of GDP next year, down from 6.1% in 2024, but slightly up from the 5% plan under Barnier.
Well, Eleonora, the consequence of this discontent, fiscal discontent, has Moody's downgrading the bonds. Now, it's not that they're at some sort of precipice moment, but they are concerned. Moody's say there is now a very low probability the next government will sustainably reduce the size of the fiscal deficits beyond next year. How much pressure does this put, again, on these budget negotiations on Le Pen this time around?
It definitely puts some pressure, and Le Pen is going to be discussing today with Prime Minister Bayrou. Overall, we see that this, given that the government will be able to extend the budget of the 2024 budget into next year, we don't see this political gridlock creating a massive economic turmoil in the short term. But still, we have scaled down our forecast for 2025. Because there will be some fiscal consolidation required next year, and spreads have widened. As we see in the crisis have widened the spreads, and that could put a drag on the economy that we estimate can be between the range of 0.3 to 0.5% in 2025. And also, even if there is a continuation of last year's accounts, there will be some austerity, and the fiscal situation is such that the next government we cannot avoid doing some fiscal efforts next year. Now, there are the longer-term risks, as also the downgrade by Moody has shown, that fiscal sustainability in the long term seems precarious. If the government fails to do any fiscal consolidation from now on, we estimate that would put the debt on a steep upward trajectory and exceed 120% by 2027. But even if we make the assumption that they return to pre-pandemic budgets, that would not be enough to stabilize the debt.
Eleonora. Let's see what the negotiations bring. Eleonora Mahou-Idi joining us from Paris. To Germany, the Chancellor there, Olaf Scholz, faces a vote of no confidence today, which he intends to lose and trigger that snap election in February. Joining us now is Olli Krug. He's outside the Bundestag in Berlin. Olli, good morning to you. How weakened is Scholz in the polls as he goes to this election in January? Because it's been a series of political stumbles all the way along to get here.
Yeah, I mean, he's doing a little bit better than he was at the very beginning of this election campaign, and he's been doing throughout this year. But he's still basically in third place, the SPD, trailing behind the CDU, the center-right, Merkel's traditional party, led by Friedrich Merz this time around, and then also trailing the far right, the AfD, the Alternative for Deutschland, which holds about 20% of the vote. And that is the sort of constellation going into this no-confidence vote that we are going to get, that begins basically right behind me at 1 p.m. with Olaf Scholz giving a little speech, 25 minutes followed by 2 hours of debate in the Bundestag before lawmakers, then a sort of roll call vote. And by the end, at about 4 p.m. local time, we're going to get the outcome of that vote. And that is likely no confidence in the chancellor and his government, dissolving the government eventually, and then heading to those early elections on February 23rd of next year. We should say that there's only ever been one such snap election called since basically the Berlin Wall fell in 1989. And going into this, we know you were just talking about South Korea and France and Germany. It is basically the budget that has been at the center of all of these political dramas. And so you have this sort of picture here in Europe where you're facing slow to basically no potential recession, and that is putting huge strain on many of the initiatives that are being sort of put forward, and it's creating a huge governability problem, not just in Germany, not just in France, but across Europe at a time when arguably, and you listen to Mario Draghi and other leaders within Europe, you actually need very strong politicians with visionary futures or views of the future to bring together things that can actually change the paradigm for this economy, whether it's the capital markets union, whether it's a banking union, all these sorts of things. They are impossible to put through when you have very, very weak governance, both in Germany and in France. And that is likely what we're going to get here again in Germany. You may get a sort of stronger sort of center-right government, but it's still going to be a coalition, and there's going to be a very sort of fragmented picture here politically.
Oliver, we appreciate it. It will be an interesting next few hours. Oliver Krug there in Berlin. Okay, and in South Korea, the Constitutional Court has begun reviewing President Yoon's impeachment case after the parliament voted to impeach him. Yoon was stripped of his powers after some of his supporters broke rank, giving his opponents the two-thirds majority needed to pass the impeachment bill. Yoon had shocked the nation by briefly imposing martial law earlier this month. Manis.
Danny, let's switch gears back to the US here. We've got President Trump seen over the weekend with President-elect Trump, I should say, seen over the weekend with his cabinet picks and his closest allies. It was the Army-Navy football game. Senator Lindsey Graham saying that the Defense Secretary nominee, Pete Hegseth, plans to release the woman who accused him of sexual assault from a confidential settlement agreement. We're joined now by Bloomberg's Kayla Gardner. Kayla, not only is this Trump's political capital being spent very, very publicly over the weekend with his picks with Tulsi Gabbard and Hegseth, how important is it that Lindsey Graham talks about Hegseth releasing his accuser from this confidential agreement?
Well, it's potentially huge because we know that senators like Joni Ernst, who has expressed reservations about Hegseth, really wants to see him fully vetted. She says she wants to see a hearing process, and her flipping essentially over the last few weeks here has really been interesting to watch, because originally she suggested that she was not yet ready to support Hegseth. And then we saw this pressure campaign really play out. We saw ads on Fox News by this Elon Musk-backed group. We also saw her receive a primary challenge in her own state. She's expected to run for re-election in 2026. So we have seen her drastically shift over the last few days. And I think this is a thread that we could potentially see over some of the other controversial nominees for Trump, whether it's Tulsi Gabbard, whether it's Robert F. Kennedy Jr., who has espoused debunked medical theories and has been nominated for the health secretary position. But we have seen MAGA's base, Trump's base, really willing to go to bat for him when it comes to these nominees. They want him to be able to put people in those positions. And I think something that was interesting over the weekend at this Army-Navy game, Ron DeSantis was at that game, but he was not seen with Donald Trump. And he is someone who has been floated as a potential replacement for Hegseth. So that was something that we were certainly watching, and yet no photos of those two together.
I was going to say, Kayla, at the Army-Navy game, he had these controversial picks with him, Tulsi Gabbard, Hegseth, Kash Patel. Is this Trump digging in his heels, saying that Congress needs to be passing this if he's willing to get these photo ops with these various people?
Yeah, it was interesting because at first he really wasn't willing to throw his weight out there for these picks. And we know that Trump's team did have a conversation with DeSantis in case Hegseth was not confirmed. And yet we saw all of them there this weekend sitting with him in that box. And so to some extent, he is throwing his political capital. But again, these are people who have always been loyal to Trump. So it's not particularly surprising that they were invited, that they were there. He's been adamant about placing people in his administration that he feels as though he can trust.
Well, let's see what happens next over the course of the next coming days. The Israeli Prime Minister Benjamin Netanyahu also spoke with President-elect Trump on Sunday, calling the meeting very warm. The issue here is, of course, I think it's about trying to understand what is the objective for Israel in Syria. You've got Bibi Netanyahu saying one thing, and perhaps this doubling the population pledge. There's nothing new in that, but it's about the action on the ground. And that has brought the air of some of the Middle Eastern nations, hasn't it?
Yeah, it's been really interesting to watch Netanyahu and Trump really have this back and forth. We saw them have multiple interactions over the last few days, whether it was on social media. We also saw Netanyahu's wife traveling to Mar-a-Lago. But these two definitely have a warm relationship. But it certainly draws into question, what incentive does Netanyahu have to continue negotiation with the Biden administration? Blinken was just in the Middle East last week and met with Netanyahu. But we know that Trump and Netanyahu just have a friendlier relationship. And we've seen Trump say that he wants to see a hostage deal by the time that he is inaugurated on January 20th. And he said, quote, that there could be potentially hell to pay if those hostages are not released. So it seems that Trump is going to have a much more assertive attitude towards Israel, really pushing and advocating for the things that they want to see. And we've seen some tension, of course, between President Biden and Netanyahu, who really wants to see better conditions, humanitarian conditions in Gaza.
Akela, we always appreciate it. Thanks for getting up early for us. That is Bloomberg's Akela Gardner. Coming up on the show, it's a big week for central banks, a no confidence vote for Chancellor Scholz. A lot on your agenda. We'll set it on your Bloomberg Brief. It's your Bloomberg Brief. Danny Berger and Manish Cranny in New York. Let's get you set up for your trading week this week. German Chancellor Olaf Scholz will submit to a parliamentary vote of confidence today. Then he will be speaking at 7 a.m. Eastern. Then we're going to get 3 central bank decisions within a window of 24 hours. We get the Fed. They announced their decision on Wednesday, 25 basis point cut. Very much so expected. That will be followed by the BOJ and the BOE. All that happens on Thursday, Manis.
Yeah, cuts and prevarication. Some stocks to watch, Danny. Supermicro exiting the NASDAQ 100, said to tap Evercore to help the firm raise a bit of capital. Axon Enterprise rising alongside MicroStrategy and Palantir as they join the NASDAQ 100. And then Broadcom is up 2.33%, raised to an outperform CICC. Price target $220. But that really had a Broadcom banging day on Thursday. Danny.
It sure did. Manis, let's leave you with a snapshot of what this bond market is doing, because there is a bid. After we saw yields move higher, biggest move higher in yields since October 2023. But the dollar, maybe the more interesting asset, Skylar Montgomery Koning saying that it is not yet fully valued and it can go further in 2025.
It's interesting because we got a big call on the Bloomberg terminal this morning that the dollar is near its peak value. It will roll over next year. Yeah. It's stomach churning. What was it? The strength is stomach churningly strong, according to Kit Jukes.
Yeah. Again, a lot of estimations that the mojo in the dollar will run out. Not so, according to Barclays.